due to the fact that Bitcoin has been moving sideways for months and overall doesn't show any significant signs of whether there would be any major increases or decreases. This fact has led many retail investors, the small players among us here, who operate in the cryptocurrency market, to watch these videos. We worried. I myself am still in this group, so don't worry. We often fear that this is the end of the bull market, that something might actually happen, that as a group, as a community, statistically, we are simply bothered by the fact that something is wrong, that something broke, that these cycles aren't working, that ultimately there might not actually be a bull market. I say us as a whole, to also identify with many people who watch me, because that's kind of the point. I personally don't believe that it would be the end of the cycle, like suddenly or soon. But I do assume that a completely different game is being played in the shadows, and what's happening behind the scenes might even exceed your wildest expectations due to the fact that there are players in this market. There are institutions and individuals who don't view all of this in such a narrow spectrum and in such a limited light. So this isn't about a short-term game, full of emotions and full of fear, full of some kind of turmoil and battling with oneself every day, but about something that plays out in the long term among people, among institutions, entities that don't have to buy at the very bottom because their goal is to control the supply. This is absolutely normal, and here it's aggressive in its very tone. Well, for many people, this is a strategy for several, even a dozen years ahead, for those big players who operate with truly massive capital in the world. And that's exactly what I'm going to tell you about today. How the cryptocurrency market is correlated with corporations, with funds, with how the global economy looks and what might potentially happen in the near future. How I treat it, how I approach it. So, exactly, behind the scenes, state funds, treasuries almost without fanfare. They treat them not as speculation, but as the foundation of such a financial future. Often, the largest American companies enter, as well as companies from Asia and Europe. Already today, they are lining up for Bitcoin before it becomes an asset that the retail investor, the little guy mentioned at the beginning of the video, will have increasingly difficult access to. So let's take a look at who, where, and why people are getting into cryptocurrencies, while others are wondering if it's time to sell and asking if you are in that group. This will be a picture from several parts of the world, different sectors, and various approaches to cryptocurrencies. And indeed, what is currently happening in the crypto scene, stagnation and sideways movement for several months, can be attributed to the deliberate strategies of the biggest players. And that's how it's controlled. I don't know if you know, but most likely the whales have been keeping Bitcoin prices in check for quite some time. Despite the fact that the price isn't moving much, they are making colossal amounts of money from it. So take a look. The Bitcoin cryptocurrency market has generally matured over the past few years. It's like a chessboard where the biggest institutions play their moves. They have leveraged trading available through the CME exchange and spot ETFs offered on Wall Street. And with the increase in institutional investors' participation, these tools have provided whales with options to conduct regular arbitrage strategies. And what we most often observe in the crab market, which is this kind of sideways market, is nothing other than the cash and carry trade of large institutions. And I'll tell you how it works. But remember, if you like these videos, subscribe to this channel. Leave a thumbs up, leave something behind. What material would you like to watch next? I'm considering recording a meticulous, detailed analysis of Dogecoin. Also on the screen you have videos there recorded about Ethereum and XRP. They have 30k views each. So if you want, leave a thumbs up and a comment under this video saying, okay, do it. It will be this week. I'm already gathering material for it, analyzing, collecting information. And that's why it's worth being on the channel. So the strategy one mentioned can be called a low-risk one. It's used by big market players, taking advantage of the price differences between the spot market and futures contracts, and in the case of Bitcoin and ETFs is this. They first buy Bitcoin on the spot market through an ETF, then simultaneously take a short position as the second step in futures contracts, where the price is usually higher than the spot, and thirdly, they profit from the price premium. This is called contango exactly, which gradually decreases as the contracts approach expiration. This average annual return from the cash and carry trade on Bitcoin ranges from 5 to 15% depending on several factors. In certain periods, when the difference between the spot price and futures contracts is significant, institutions can achieve even up to 20% annually. And with large funds, this is truly a massive amount of capital, with practically zero directional risk, because they hedge their position with a short on futures. And it's this strategy that might be keeping Bitcoin stagnant right now, because large institutions don't need to rely on price increases, as they profit from the price difference, as long as the futures market maintains a premium. Evidence of the growing popularity of this strategy can be found by comparing the 30-day net inflows sum to ETFs and the 30-day. Here you'll see the change in open interest on CME futures contracts. The chart is in front of you, so we observe a similar scale of changes in both of these indicators, which suggests that investors are simply opening long positions on the spot market through Bitcoin ETFs. taking short positions on CME. And that's how it looks, what is happening in the American market. Because besides carry trade and widespread arbitrage, there is regular, slow accumulation, which I will tell you about in a moment. And first of all, this concerns banks, the largest banks in the USA. PNC Bank, one of the 10 largest in the States, has significantly increased its exposure to Bitcoin ETFs. It raised the value of its holdings from $10 to $67 million. However, it is still far from leaders like Goldman Sachs, which holds $700 million. But we also have BNY Mellon, which is the oldest bank in America, and it also already has exposure to Bitcoin ETFs. And from January 2024, these ETFs have collectively attracted $41 billion, which confirms that even in traditional markets, Bitcoin can no longer be ignored. And so, wrapping up the topic of banks, although this is a Canadian bank, here's another piece info. The third largest in the country, the Bank of Montreal, recently revealed exposure to Bitcoin valued at $150 million. The list of public companies that own Bitcoin is also constantly growing. It includes companies from various technology sectors. We have MicroStrategy, which operates in data analytics and business software. We have Bitcoin miners, for example, Marathon, Riot, CleanSpark, or Hut 8, we have Coinbase. There's Block, which is a fintech company. Here you have Galaxy Digital, an investment and advisory firm. In the digital assets sector, Tesla, of course, focuses on robotics, ranking high with over $1 billion in Bitcoin. And here you have the percentage they own of the total pool of 21 million units. On the other hand, MicroStrategy has $46 billion in Bitcoin, so it's substantial. There are also medical companies, such as Semler Scientific, and they have, for example, $300 million. That's 0.015% of the total supply. The United States, although they hold the largest market share in cryptocurrencies, are not the center of the world, and it's worth paying attention to what's happening in other parts of the globe. Here, Canada and Germany come into play, but generally Asia, particularly Japan, is known for its positive approach to new technologies and innovations. Japanese companies are increasingly adopting Bitcoin not only as an investment vehicle, but also as a part of their corporate strategy. This is a sign of a deeper shift in the approach to digital assets in this particular region. You've probably heard about Metaplanet. As I sometimes mention the Japanese company, it is a hospitality company. It became the first and only publicly traded company in Japan that almost entirely bases its corporate reserves in Bitcoin. Moreover, Metaplanet recorded an unrealized profit in 2024 of $36 million. And this is just the beginning, because this Japanese hospitality company does not intend to stop, from what I've read. They plan an aggressive expansion of their Bitcoin assets and aim to accumulate 10,000 units by the end of 2025 and 21,000 units. I wonder why that number. By the end of 2026. Take a look at the daily charts for this beautiful graph. It looks like some altcoin shitcoin, but in less than a year, the shares of this company, specifically Metaplanet, have increased 30 times. That's about 2,900% roughly. And that makes it, attention, the best performing company in the world among 55,000 public companies in 2024. And that's quite a paradox. Question, thesis, can you beat the entire global stock market by investing in Bitcoin? Metaplanet proved that it does. It just seems that this Bitcoin corporate strategy is not just an American phenomenon, as Japan was once associated with the collapse of the MTGOX exchange, and today it is a market that could even become the next stronghold of corporate Bitcoin accumulation. And the question is no longer if, but simply who will be next. Well, take a look, for example, at Gumi. This is a Japanese company that deals with mobile games. According to their announcement on February 10th, the board approved the purchase of Bitcoin worth 1 billion yen, which is just under $7 million. Next is Remix Point. This is a Japanese company known for its activities in the energy management sector. They are consistently increasing their involvement in cryptocurrencies. At the beginning of the year, the company purchased 33 more Bitcoins, which raised its total holdings to 333 units, and that's worth $32 million. But it's not just Bitcoins and that only companies are buying Bitcoin, because obviously, they mainly focus on it since it's the safest. They also own 1,400 units of Ethereum, 6,700 units of Solana, 500,000 XRP, 20,000 units of AVAX, and over 1 million units of Dogecoin. So this race in the Asian region is simply in full swing. Also, the Hong Kong company Boja Interactive. It is listed on the Hong Kong Stock Exchange and is called the MicroStrategy of Hong Kong, just like that locally. And it has just surpassed the Japanese Metaplanet, which I just mentioned to you. I showed you how it grew and became the largest corporate holder of Bitcoin in Asia. This company converted 14,000 Ethereum into 500 Bitcoins, which at a value of $50 million increased the total holdings to just over 3,000 Bitcoins. There is also a Shanghai-based company called Kango, and it decided to take a different path because instead of buying, it mines Bitcoin on its own. In November, it invested $400 million in mining equipment, which has already resulted in the extraction of nearly 1,000 Bitcoins worth $87 million. What are the effects? The effect is that Kango's shares have doubled in value during the same period. Next, we have Singapore. That's how it looks globally. Today, I'm telling you about this so you know what's up around the world. It's a Singaporean company called Genius Group. The educational company focused on AI continues its strategy, which is tentatively called Bitcoin First. It is increasing its reserves by another $5 million, which raises its total holdings to 372 Bitcoins. And the company's plan is to allocate 90% of its reserves in Bitcoin. And additionally, the company plans to expand its reserves to $1 billion within a decade. So the plans are ambitious. Not only East Asia, but also the Middle East. On my Telegram in the group, I recently posted information that the Abu Dhabi Investment Authority bought shares in a Bitcoin ETF for nearly $500 million. I'm also sharing with you a table of my trades and the longs that I recently initiated in the group. On YouTube, I'm not able to share this in real time, so if someone is following me, okay, a lot about Asia, a lot about America. So, what does the situation look like in Europe, and what should we expect from all the companies that surround us here? Well, for example, there is a certain Norwegian sovereign wealth fund, which is managed by Norges, the Norwegian central bank, and this fund, although unintentionally increased exposure to Bitcoin by 153% in a year. I'll explain to you how that happened. Namely, it invested in companies like MicroStrategy, Coinbase, Riot Platforms, Mara, and Metaplanet, which are 5 interesting key companies that themselves hold Bitcoin in their balances. And although the fund's exposure mainly results from algorithmic arrangement of sectors, it shows how Bitcoin permeates into global investment portfolios, even indirectly, even if someone didn't fully know or realize that they have it somewhere, in the form of a stake in some company. This is often how it looks among traditional institutions. Another major entity is the British bank Barclays. They disclosed in their financial report an exposure to Bitcoin worth $130 million. So you know, the more banks, funds, and institutions that hold it in such large amounts and keep it for years, probably not just for half a year, these cycles might also diverge over time, and the declines might be less severe. But it should also be noted that European politicians are currently critical towards Bitcoin and cryptocurrencies. For example, as Bitcoin gains significance in portfolios worldwide, the European Union unfortunately remains behind in this matter. There's Christine Lagarde. She is the president of the European Central Bank, and she has firmly excluded the addition of Bitcoin to the reserves of member countries, claiming its volatility and connections to illegal finances make it an unsuitable reserve asset. And I am convinced that this decision by European politicians is once again mistaken, because sooner or later the Union will accumulate Bitcoin following the entire world, but unfortunately at much higher prices. Let me know what you think. Should Poland, or Europe in general, the European Union, accumulate Bitcoin as a reserve to catch up with other countries, just to be in this race as well, not wasting the nominal value of funds that we simply have in fiat currencies, but rather trying to secure it for the future? You need to know and look at it from this perspective, that Bitcoin is no longer a toy for geeks or internet money for some anarchists. It is an asset that large companies are accumulating, not selling. And the question is, should retailers, individuals, small private investors be worried? I think not, because this is good. Because if global investment funds, Fortune 500 companies, and governments are betting on Bitcoin as a long-term foundation, then why would anyone believe that Bitcoin would disappear? It won't be like that. Simply put, the long-term vision for the next several years looks promising. But there's no denying that in the short term, meaning over the next few months, the market is driven by liquidity. And the question is, how does it look at the moment? Well, generally there's such a post. A certain analyst broke down the topic of market liquidity into its basic components. Here's what you need to know and brief. In general, the liquidity injection, which could amount to almost $1 trillion or $840 billion from the TGA account, which is the Treasury General account. This injection has just started in the United States already last weekend. Functionally, it is similar to quantitative easing, but it is temporary in nature. Let's explain this in the simplest way possible. In short, the use of these funds, which are related to the balance with the debt limit, simply started exactly on Wednesday, February 12th, which was 6 days ago. Because the statutory debt limit of the U.S. government has reached its ceiling of $36 trillion, this means that the Treasury Department cannot issue new debt at the moment. As a result, as you can see, it is forced to use cash from the TGA to finance expenditures. So this is the moment when it started. It's a kind of injection that floods the market with new liquidity, raising the level of financial reserves. And this analyst, whom I showed you here, writes that the locomotive, the train, has already started. It won't stop. It's heading to the final station until lawmakers reach a new agreement on the debt ceiling. On Tuesday, February 11th, the TGA balance was $840 billion, so potentially the maximum injection could be that much. Now, on the chart, you can see this preliminary estimate of the path of liquidity inflow and outflow, and it assumes that in this first part of the fund usage, there will be liquidity injection of $600 billion between February 12th and 11th April, which honestly, ideally, would perfectly fit the potential increases just from this week. I am full of hope that we will close February still positively, that March will be very good, and that at the turn of March and April we will be cashing out some positions and possibly repurchasing them in the spring or summer, making a second round and enjoying it in the third quarter, or simply cashing in profits from individual tokens. We'll see how it goes, but it's not said that, for example, Ether or something else can't make several dozen % in a month, because such situations happened before. So the most important indicator to follow in order to determine the potential impact on the markets is the net liquidity injection from all sources of the Federal Reserve, and it will most likely be less than $600 billion for two reasons, including the continuation of QD and also due to the increase in the use of reverse repo. Here it shows what it looks like, precisely because of the dynamics related to the debt ceiling and the rules that the Treasury Department must follow. We will first see a negative net supply of Treasury bills. If all this holds, the issuance of these bills will likely continue to be falling, which will make them increasingly scarce. And this may prompt money market funds to place cash in the Fed's reverse repo operation, which could potentially push this chart up or at least halt its downward trend. And an increase in the use of this strategy would mean a liquidity outflow, because money would be directed from the markets to the reverse repo mechanism at the Fed directly. So the total injection of this liquidity will be reflected on the chart, which you can see now on the screen. In the past week, this chart has already increased by about $50 billion. And the question is when a new agreement on the debt ceiling will be reached. It just seems that a resolution to the conflict over the debt ceiling will not appear anytime soon. For example, on Wednesday, House Republicans proposed a plan to introduce tax cuts worth $1 trillion and to raise the debt ceiling. Passing this bill will be difficult, considering the fragile, internally divided Republican majority simply expects that Democrats will, in this matter, to be unanimous in opposition, and the decisive role here will be played by the House Republican leader, Mike Johnson, who is trying to unite the representatives around this plan. The problem is that a fairly large group of ultra-conservative Republicans is opposed to raising the debt ceiling. As a rule, they have never voted for its increase, and their leaders emphasize that even a call from the president won't convince some of these members, so previous increases in the limit required support from both parties. And just to quickly summarize what I said, it might simply be a bit complicated. We see that the current market conditions still favor Bitcoin, that its market dominance remains high and more respected. Entities recognize boost Bitcoin position. That's the truth, and they see not only potential here for investment, but they also see that it is great marketing for them, because there is a positive correlation between a company's valuation and it has exposure to Bitcoin, as you saw today in the examples, or whether they plan to increase exposure and announce that they will be buying more, which also boosts the price of Bitcoin itself, and often the company's valuation. And you could say that if a company wants to encourage investors to simply buy their shares, they should announce that they are starting to invest in Bitcoin or that they will be mining it. Bitcoin is in the spotlight. Altcoins are still living in its shadow. Institutions and governments adopting Bitcoin is one reason, and another key reason is simply the liquidity in the market, which I just discussed. Until last week, there wasn't enough liquidity in the market, but from February 12th, the situation should change. We are waiting for the addition of nearly $1 billion over the next few months, and in the meantime, we are also forced to wait for the start of quantitative easing by the Fed. And without a doubt, the most important thing in the altcoin market right now is liquidity, and until it starts to improve, altcoins may continue to stagnate. Simply put, a lot of people keep saying that it's all because of the launch of pump funds, those bad shitcoins from Solana. It got diluted, memecoins, etc. That Solana ruined this cycle, and to some extent, certainly, the capital is more spread out over hundreds of thousands of new tokens. But when we look at the numbers, we see that the market capitalization of memecoins is just 2%. 2% of the entire market 150. So memes didn't take away any significant amount of capital. The main problem for outs now is the continuously growing popularity of Bitcoin and previously unfavorable liquidity conditions. Therefore, the most important issues for outs now should be improving liquidity and those ETFs on altcoins, which sooner or later will give these altcoins recognition among institutions. Such exposure and these funds, institutions, companies will be able to buy them in a simpler form, including XRP, Litecoin, Solana. It could be interesting. And last week, the SEC Commission reviewed the applications from Grayscale for an ETF on XRP and Dogecoin. So about XRP, I recorded a video. It's in the top right corner. Be sure to check it out. It has a lot of views. I also included scenarios on how much it might cost, what the chances are that it will reach $10 in this cycle. So check it out on my channel. The video is a few back, and I've just pinned it for you. Also, remember that if you want a video, subscribe to the channel and leave a thumbs up and write in the comments, and I'll definitely make it this week. Maybe it would be up by Thursday. So generally, it would be nice if these ETFs were available. This step seemed impossible until recently because during Gary Gensler's time, similar applications were simply rejected outright. Although the acceptance of documentation doesn't yet mean approval, everything is in progress, and the SEC has never approached it openly before to the acceptance of such ETFs. And now it's happening. And Eric Balcones from Bloomberg simply believes that previously issuers were forced to withdraw their applications, and Eric Balcones from Bloomberg notes that previously issuers were forced to withdraw these applications immediately after submission. Now the situation looks different, and that's a good sign, because previously our forecasts were optimistic, and now we have even greater chances of approval. So remember, the crypto market should continue to grow. This is not the end in my opinion. I'm betting on it. I have this bet with myself that I need to stick to it, and after, just patiently wait. If we have some lost positions, that's how it is sometimes. It's not always perfect. There will always be some positions partially in the red. That's practically how the market is structured. Except for DCA on Bitcoin, if we add to a position in profit, maybe not. Or for example on Ethereum. And the truth is when these big corporations, let me add, are racing for Bitcoin, and sovereign wealth funds are unknowingly accumulating exposure to Bitcoin, one thing becomes clear. Simply put, the future of cryptocurrencies is already determined in some form. American, Asian, or European funds are not speculators from Twitter, but institutions whose decisions weigh billions of dollars, and each cycle has its heroes. Once, it was those who bought Bitcoin for $100. Today, it's those who understand it and hold it, while the big players are just lining up because the asset has become large enough that you can simply invest in it. And cryptocurrencies are not a niche experiment. This is a game where the stakes are the future of global finance, and in this game, the winner is the one who thinks in cycles long-term over years, and not just narrow-minded with blinders on because it's been dropping for 2 weeks. That doesn't matter. Hang in there.